This is an end of day update. It is Thursday, February 28th, 2019, and we're looking at the daily time frame. So we've got quite a bit of economic data set to be released throughout the London and New York session for Friday, and then after that we've got non-farm payrolls. I think it's a little bit too far out to really start thinking that non-farm payrolls is really going to have an impact right now. I think it's just a matter of getting through the next two additional trading sessions before the market closes for this week, and then noticing, how things close for the week and then how they open next week. That might give us a better idea. But there's a few things that we were talking about earlier in the chat room. So we're looking at the dollar yen. So the dollar yen is still moving higher. So I mean, if we go back to December, the end of December, the beginning of the year, January, the spike here in the dollar yen, it doesn't surprise me to see that based on what really caused that reaction anyway, that very often we see this kind of behavior where it just floats right back to the level that it really took off from or broke out of. And prior to that, and I want to go back to this chart right here, because prior to all of that happening, during October, November, we were looking at this range of consolidation just about every day, waiting for it to sort of break out of that range. Very often there were days where price was more or less in the middle of that range of consolidation. This is the daily chart. It doesn't mean that there aren't any opportunities there, but when I see a chart that looks like something like this, and depending on, whether it's a 1 hour chart, 30-minute chart, 4 hour chart, I mean, for the most part, the structure is pretty much the same. When I see choppy sideways consolidation inside of a clear consolidation range like this, and it goes on for quite some time, I'm going to be a lot careful about selecting some of my trades. I'm constantly looking to eliminate possible trade setups because I know how much more risky it is trading inside of the middle of these consolidation ranges. I say it all the time, and it's, very often we can see some of these reversal candle patterns and they look like they might work, and then sometimes they do, sometimes they don't. Sometimes you get, a bullish candle and it flips right around and goes right back down the opposite direction. It goes just a little bit lower and then turns around and goes back up. And that continues while it's inside of this consolidation range. It doesn't always happen, but it does happen often enough where when some of these good valid signals, if they're inside the middle of a consolidation range, the way I look at it is that it's riskier. Some of them work, some of them don't. And when I have that kind of attitude and I know that I'm not trading off of specific levels that I can gauge how the market and the rest of the market's trading around it, if it looks like it's in the middle of the range and it looks like a candle pattern and you're just, I don't trade because I'm bored, right? I'm going to wait for these specific opportunities that I know are more likely to work. It wasn't that easy in the beginning of my trading career. I was usually trading just because I wanted money and I thought I could be in a trade at all times, but it doesn't work like that. But what I'm getting at is that I'm looking for not only price to move to specific levels, but I'm also looking at specific times to trade, meaning that there are certain sessions that are going to produce better results than others. And often I go back to this one. It was a case study. It was something that Daily FX and FXCM and a few other brokers have done. They've done it over the past few years. Different brokers have done it. But what they do is they take the data of all of their clients, and then they notice when they're more likely to have a string or a series of losing trades. They're more likely to lose on their trades during certain sessions, and you're less likely to experience losses during certain sessions. And for me, the way I trade, very often the better trading sessions are during the New York session. It's more volume, more participation. I've got the benefit of looking at the news to confirm the technical signals that I'm trading at the same time. All of that helps me to confirm trades, and I would much rather trade during opportunities like that, in addition to waiting for price to reach significant or support rather than just trying to trade inside of the middle of these ranges. Again, if I was to show you this chart and say that this is a 1 hour chart, I'm going to leave it alone and wait until it breaks out. For me, the price structure is just pretty much the same thing. Even though we're looking at a daily time frame, it just means I'm going to be waiting a little bit longer. But I want to keep coming back to charts like this when I see this kind of consolidation and remind myself that maybe I shouldn't be trading on a daily basis, for intraday trading, for day trading, maybe I shouldn't be worrying about this particular currency pair because of the consolidation, even on the larger time frames. Maybe I should focus in on another one. And that's really more or less what we did during that time, during this phase of consolidation here for the dollar yen. We looked at other currency pairs that gave us better opportunities for the most part. Sometimes the entire market will move sideways. It just, it moves in cycles and things happen just that way. But again, I stand a better chance of waiting for price to go to either support or resistance, and then either trading the reversal or trading the breakout. And that's exactly what we saw here with that breakout before it dropped back at the beginning of January, the end of December. So again, watching price go all the way back up here doesn't surprise me, and it's probably going to remain somewhere inside of this consolidation range for a little while. It's been trending pretty consistently. There's been a few flat days, but for the most part, this trend really hasn't reversed. It really hasn't pulled back to any significant level where it has taken out a previous low that would maybe indicate the possibility of it, stalling for a little while or maybe reversing. But this one, is just continue to move a lot higher. So we're staying out of the way. Remember, we don't want to be looking for shorts. We're always going to be doing better trading in the direction of the trend. And as far as HL30s, I wouldn't be looking to trade HL30s just yet on this one. It is at a major resistance or support, but right now, even though it is a major resistance level, we still have to wait and see how it's going to react, and it's just still powering right through it. Now, if it decides to stall here, let's say with the next couple of days worth of economic data, and something reverses, we're clearly going to see it as divergence. And I would be looking to trade something that would look like a Tech 1 trade. A Tech 1 trade is the second technique that I developed in my trading system back in 2001. I talk about that in the membership area, and there's a whole module on how to trade the Tech 1 trade. But basically, it's a reversal. Waiting for price to go up to support or resistance, major support or resistance, and then looking for the divergence to execute the trade in the opposite direction. We're not picking tops and bottoms. We're waiting for confirmation. And when I say picking tops and bottoms, even though it may look like I'm trading a top or a bottom, I'm waiting for confirmation. I'm not just waiting for price to clear a certain price level and then immediately trade it in the opposite direction. I know some strategies work that way. I just don't like doing it that way. I wait for a lot more confirmation. I'll wait as long as it takes. So I need confirmation here with the divergence in these indicators here. So that is the dollar yen. The euro yen, there's an old uptrend line here. You can see it going all the way back here to June 2016. And I mean, it's intact. I mean, it's a valid trend line. It is running into the bottom side of that uptrend right here. This is the euro yen daily time frame. But I think that if we're going to be watching, if the dollar yen, we're going to be watching these together. If the yen is still showing more signs of weakness, Japanese yen futures, I'll be going to those charts as well. It's possible that this one could continue and just kind of push right through it. Sometimes trend lines are made to be broken in one way or the other. They don't always have to hold. It's just at that point when it reaches it, we want to sit up, pay attention, and look for clues. Is it going to reverse, or is it just going to continue to just float higher? I don't think that this one's likely to stop anytime soon. I could be wrong. Friday's trading, that candle, that daily candle could print something that could be maybe a bearish reversal candle, and maybe we would start looking for indicator confirmation, something like that, or also economic data that would support that. But at this point, it doesn't look like it's going to stop. Things could change in the next couple of hours, but right now it doesn't. It just looks temporarily like it's running right into that trend line. And I leave those trend lines. I recommend you do that with some of these major trend lines. Leave them in place. Sometimes they're going to have a reaction, not always, but sometimes. And when you leave them in there and you can sit up and notice, you might get an early warning as to whether or not you should go opposite, the direction of what you see, or if you're going to get a valid signal. So anyway, we'll keep an eye on that one as well. Euro, dollar. This is the consolidation that I'm talking about. So this is the daily time frame, euro dollar. This is the original range of consolidation that we tried trading through most of November into the new year, and it's still here. We're still just about in the middle of this consolidation range. And what that tells me when I see this on a daily time frame, and I would treat it just the same way if it was a 1 hour chart. But when I see it on a daily time frame, again, I'm just going to remind myself that price is about in the middle of this range. Some of these signals are not going to be as reliable. It's riskier to trade some of these signals. I need to wait. So I'm going to be trading the euro dollar a lot less than some of the other currency pairs. I'll show you those in just a moment here. We'll take a look at the pound dollar here. But again, I just want to give you a sort of a warning or an advance notice that don't expect too many trades on the euro dollar because of this, because of the consolidation. It does get choppier in here. We've seen the euro dollar chop. There was a continuation breakout trade. It did not give the 3-pip entry. I'll talk about that in just a moment. So that rule keeps us out of trouble. But again, after that, it still just stalls, goes sideways, doesn't really do anything. It's not moving with that consistency and the momentum that I would normally like to trade with. When the rest of the market has that collective sentiment, that understanding that, hey, we're in an uptrend, hey, we're in a downtrend, let's keep trading it. We've got a clear level of support or resistance that we can trade it to. When the market collectively looks at price like that, it's easier to see a lot of these trending moves move consistently. And of course, we expect retracements, but they're not as choppy or as unpredictable as it usually can be inside of consolidation like this. It's possible that the euro dollar could experience another round of consolidation as choppy as it was through November, the end of November, and into December. That was really choppy in here. You can see that range right there where I'm moving my cursor. It's a lot different than some of these other movements that we see here. But nevertheless, it's still inside of this consolidation range, so I'm going to be trading this one less. I can't rule out the possibility of getting a trade during the New York session on the euro dollar. It's possible. Sometimes I get these trades at about anywhere between 8:30 New York time and 10 o'clock New York time, where it's a clear move off of economic data and I get a clear signal. And then that move only lasts anywhere from 30 minutes to an hour. I'll trade it. It hits my target. I'm in, I'm out, I'm done with the trade, and that's it. I reset and wait. And if something like that was to happen, of course, at the end of the day, I would come back to this chart, take a look at where things closed and where they are. Are we still inside a consolidation? Again, it'll remind me for next week, be careful, trade less this particular pair. So let's take a look at the pound dollar. The pound dollar, we had a candle that closed above that resistance on the daily time frame, printing something that looks like a continuation breakout trade right there, but there wasn't the follow through. So the next candle or two or three never went any higher than the signal candle. So I don't go long just because it closes above resistance. I need price to take out the high of the signal candle. So that brings me back to this one. Let's take a look at the euro dollar, which did pretty much something like that. So there was I've made some adjustments obviously to my charts here, but originally a while back, the euro dollar looked something like this. So we had a range of consolidation in here, and then we had a candle that closed above resistance, looking like a possible continuation breakout trade right here on this candle. Again, when a candle closes above or below resistance or support and breaks out of consolidation, that isn't enough for me to get into the trade. I still need more confirmation, and my confirmation is that 3-pip entry rule. I made that 3-pip entry rule after I figured out how to get into these trades with these breakouts. The continuation breakout trade, it's actually the first technique that I developed. So when I see, first of all, it really comes back down to being able to correctly identify consolidation, which high or low would be more likely to cause the breakout. And then, of course, a lot of times this will happen with economic data. But when I see a candle that closes outside of that range, again, I wait for the candle to close relative to the time frame that I'm trading off of, which in this case, it's a 1-hour time frame. And then I look at the indicators to confirm. I pay attention to the news. Is the news likely to support price to trend higher? And still, even though that candle closes, I still need to wait for that 3-pip entry. So what was happening was, even though I was able to identify the breakout candle, sometimes these turned into head fakes, just like you see here. So initially, when I put together this strategy, I would wait for the candle to close out of the consolidation range, just like this candle here, and then I would just get into the trade once it closed. And then I would watch this kind of behavior. It would just turn around and go right back up, right back down the opposite direction. So I had to figure out ways to eliminate the possibility of getting into some of these head fakes. So the way I solved that problem was to wait for more follow through. I remember hearing John Bollinger talk about follow through after breakouts, things like that. There's nothing wrong with waiting for the next day. And in that situation where I remember a discussion he was having, he was talking about daily candles, but I applied it to the 1 hour time frame and it works perfectly. So I wait for price to then take out the high of the signal candle, and then I can expect more follow through. 90 to 95% of the time, if I've identified the right consolidation and the right breakout, and I get everything according to these indicators lining up and the 3-pip entry, it's going to hit its 55-pip target. It's that effective. But again, that 3-pip entry rule keeps me out of trouble, meaning that when that candle closed, I waited for the 3-pip entry. I never got the 3-pip entry. So I never went long. And then I watch this kind of behavior here. Now, sometimes it's a surprise, right? We don't really know how far it's going to reverse unless there's pretty significant economic data or maybe some kind of a political event that causes something like this to happen. Then we could probably trade that. But at that point, now we start looking for new ranges of consolidation. This is getting kind of choppy. So I may just leave this one alone. I don't know if I'm going to trade off of support back up again. I don't know if I'm going to get a trade during the New York session on this one. I really don't know what it's going to look like. But I'm not really thinking or worried about this one. I'm going to be focusing in on either the dollar yen or the yen crosses, and then also the pound dollar. So that's what we're looking at leading into tomorrow. Again, there's going to be quite a bit of economic data. So it could be, there could be some activity, but I don't know if I'm going to get a valid signal. If I don't get a valid signal, then I've got to stay away from it. It could be choppy. It could be moving up and down and up and down, for 3, 4, 5 hours where it's really hard to predict where it's going to go next. And then it could just go sideways into the close. That's a possibility. If it does that, I'll stay out. But if I get a clear signal, if I get a clear opportunity with some economic data, I'll definitely take the trade.